Before you click away from this video, let me hit you with one number that stopped me cold. 79%. Let me say that again. 79% of the biggest financial institutions on Earth are now tied to Ripple. Bank of America, BlackRock, JPMorgan, Goldman Sachs, and one single bank on that list sits on top of $53 trillion. Picture that number for a second. 53 trillion. And this isn't some hype account guessing. It's straight out of a Bitwise institutional table from this quarter. Q3 2026. Black and white. The kind of data these giant firms actually put their name on. Now, the internet took that number and screamed, "The banks are upgrading to XRP." And I've got to be honest with you, that part's not quite right. But stay with me, because once you understand what that 79% actually means, the real story is somehow bigger and more bullish than the clickbait version. And here's the best part. It might mean we're standing at the very beginning of this thing, not the end. Let me show you exactly what I mean. Let's dig in. Real quick, from me to you. I'm not a financial advisor, and this isn't financial advice. And today I'm going to separate what's real from what's hype, because there's a lot of both in this story, and I'll always tell you which is which. That honesty is for you, not against the excitement. Never risk what you can't afford to lose, and always do your own research. Cool? All right, let's get into it. What's going on, everybody? Welcome back to Crypto with BHW, where we tell it to you straight with heart. Grab your coffee, get comfy, because what I'm about to show you is one of the most quietly bullish pictures XRP has had in a long time. Once you see it clearly, let's go. All right, let me show you exactly where that 79% comes from, because the source matters more than you'd think. Bitwise, a major serious crypto asset manager, not some random on the internet, puts out a quarterly table mapping which of the world's biggest financial institutions are active in digital assets. And they break it into buckets: crypto trading and custody, private crypto funds, crypto ETPs, crypto-enabled payments, and tokenization. Basically, a scorecard of who's in the game and who's still standing on the sidelines. Now, here's what somebody did with that table. They took it and overlaid it with Ripple and XRP connections. And when the dust settled, 79% of those institutions had a documented tie to Ripple's world. And when I say read the list, I mean read the list, because your jaw hits the floor. Bank of America, BlackRock, BNY Mellon, Charles Schwab, Citi, CME Group, Deutsche Bank, Franklin Templeton, Goldman Sachs, HSBC, JPMorgan, Mastercard, Morgan Stanley, UBS, Visa, Vanguard, Wells Fargo, the titans, the names that basically run global money. Nearly 8 in 10 of them. And that's just the giants we talk about every single day. Underneath them sit thousands of smaller banks and credit unions all over the world that are going to need some kind of crypto and blockchain infrastructure too, sooner or later. So this isn't a handful of experiments in a lab somewhere. This is the entire financial system slowly turning to face the same direction. And Ripple keeps showing up in the frame over and over again. So the 79%, it's real. It's documented. It's this quarter. That part is not hype, and I need you to hold on to it, because now I've got to show you the one word that makes it even more interesting than it looks. Because here's the thing that'll actually make you more bullish once you get it, not less. There's a difference between being tied to Ripple and using XRP. And that gap, that space between those two ideas, that gap is exactly where the opportunity lives. Let me explain. Okay, here's the honest part, and I promise you, by the end of this section, you'll see why it's good news, not bad. That 79% measures connection, a partnership, a pilot, a product, some kind of exposure. It does not mean 79% of banks are out there buying and holding XRP on their balance sheets. Those are two completely different things, and anybody blurring them together is selling you a dream instead of the truth. So let me break the real connections into 3 honest buckets, and you'll see the full picture. Bucket 1, the ones actually touching XRP directly. Companies like SBI Remit in Japan and Travelex Bank in Brazil have run live XRP corridors, using it as a bridge to move real money across borders. Real usage, real value moving, just not as common yet as the loudest headlines want you to believe. Bucket 2, the stablecoin road. And this one is huge and growing fast. RLUSD, Ripple's dollar stablecoin, is custodied by BNY Mellon, that $53 trillion institution I mentioned. And Société Générale, one of the biggest banks in all of Europe, launched its Euro stablecoin right on the XRP Ledger. So these giants aren't holding XRP the token, they're building on Ripple's rails and its ledger. That's arguably even stickier. Bucket 3, exposure through ETFs. Goldman Sachs put around $154 million into XRP ETFs. BNY Mellon custodies XRP ETF assets. That's Wall Street getting real XRP exposure through clean, regulated products they're comfortable with. Now, here's the reframe that changes absolutely everything. Most of these institutions are connected, but not yet using XRP directly. So ask yourself one honest question. If the price is where it is today, right now, with most of these giants only connected, what on earth happens as they start moving from connected to actually using? That's not a ceiling above us, that's a runway in front of us. We're not looking at the end of the story here. We're looking at the first chapter, maybe even the first page, and that to me is wildly, genuinely exciting. And to see why all these giants keep circling the same network, you have to understand the one thing XRP was built to do better than almost anything else on the planet. It's a single word, and once it clicks for you, the whole picture snaps right into focus. All right, this is the heart of it, and it's the most bullish idea in the whole video, so let me really make it land for you. Every one of these institutions, the banks, the payment giants, the asset managers, they're all racing to tokenize things. Tokenized treasuries, tokenized funds, tokenized deposits, tokenized everything, but they all slam face first into the same wall: settlement. You can tokenize an asset all day long, but at some point, the two sides of a trade actually have to settle. Value has to move, change hands, and finalize. And that's the genuinely hard part. It's the exact same bottleneck that's plagued cross-border payments and equities trading for decades. Different industries, same wall. Now, what was XRP built for from literally day one? Settlement. Being the neutral bridge that lets you swap anything for anything, fast and final, without parking money all over the world. It was never really trying to be a meme coin. It was trying to be the settlement layer underneath all of this tokenized value. And that's exactly the piece that everyone else is scrambling to solve. And here's the thing, it's not just theory anymore. Ripple, JPMorgan, Mastercard, and Ondo Finance actually ran a pilot using the XRP Ledger to settle tokenized US treasuries, testing XRPL as a neutral settlement fabric, sitting right under bank money and tokenized funds. That's not a press release fantasy. That's a live test with some of the biggest names in finance sitting at the table. Quick one, before we keep going. Did you know most banks using Ripple don't actually hold XRP yet? They use its software or its stablecoin. Type yes or no in the comments. I really want to see who genuinely knew that. And here's the optimistic kicker. As tokenization explodes toward the tens of trillions of dollars that firms like Boston Consulting Group are projecting, the settlement layer underneath all of it becomes some of the most valuable real estate in the entire financial system. If XRP earns even a slice of that job, even a slice, you start to see why people get so excited. And the infrastructure to make that real isn't a someday thing. It's being built right now, in real time, while most people are staring at a price chart. Speaking of being built right now, there's a whole engine humming away in the background that almost nobody's watching. And it's the part that quietly turns XRP can settle for institutions into XRP is actually ready for institutions. Let me pull back the curtain on it. Okay, this is the stuff that gets me genuinely fired up, because it's pure signal. No hype, no promises, just builders building. While everyone's hypnotized by the price, the XRP Ledger has a whole stack of upgrades moving toward it that read like a checklist someone wrote titled, "What would big institutions need before they'll actually use this thing?" Let me give you the highlights, in plain English, no jargon. Confidential transfers, This one's massive. It lets institutions hide transaction amounts and balances on the ledger, while still keeping the total supply publicly verifiable. Why does that matter so much? Because a bank simply cannot have its client balances and trade sizes exposed for the whole world to see on a public chain. It's a non-starter. This upgrade solves exactly that problem, and it comes with built-in view keys, so auditors and regulators can still get compliant visibility when they need it. That's institutional-grade privacy. That's a door that was locked, getting unlocked. Then, there's sponsored fees, which means a bank or an app can cover the tiny XRP fees on behalf of its customers. So brand new users don't even need to hold XRP first just to get started. It quietly kills one of the biggest friction points for onboarding regular people. Then, permission delegation, role-based access, so an institution can keep its master keys locked away in cold storage while letting the day-to-day operations run on tightly scoped, limited permissions. That's treasury-grade security, the kind a real company actually requires. And then a native lending framework, letting institutions borrow against on-chain assets, with the ledger itself automating the loan servicing, the interest, the repayments. You see the pattern forming here. Privacy, easy onboarding, enterprise security, lending. Every single one of these upgrades is aimed like a laser straight at making the XRP Ledger something a serious institution can actually plug into without holding their nose. The builders aren't sitting around waiting for a bull market to show up. They're laying track, quietly, patiently, so that the moment the institutions are ready to move, the rails are already sitting there, finished. That to me is more bullish than any green candle you'll ever see. So let's bring it all the way home now. The honest scorecard, and why I think it points somewhere genuinely exciting for the people actually paying attention instead of just reacting. All right, let me give it to you straight, the way I'd tell a friend sitting right across the table from me. Here's the honest, optimistic read. Is XRP the settlement backbone of global finance today? No, not yet. Are 79% of banks using XRP right this second? Also no. But here's what is true. And it's a whole lot. The biggest institutions on Earth are already woven into Ripple's ecosystem. Real money is flowing through RLUSD on the XRP Ledger. Wall Street is getting exposure through ETFs. Live pilots are settling tokenized treasuries on XRPL. And the ledger itself is getting upgrade after upgrade aimed directly at institutions. Those aren't dreams. Those are documented facts. And every one of them points the same direction. And here's why I'm genuinely optimistic instead of just blindly hyped. Think about the timing of all of this. The connections, the pilots, the upgrades. All of it is happening while the price is still down here, quiet, consolidating, kind of boring. Most of these giants are still sitting in connected but not fully using mode, which means the story is nowhere near over. If anything, it tells me we're early. And being early, with your eyes wide open, understanding exactly why you're here, that's the best seat in the entire house. Nobody gets to buy a front row seat after the show's already sold out. So what do you actually do with all this? You watch the right things. Not fake tweets, not 80% of banks are upgrading clickbait thumbnails. You watch the real signals. The pilots going live, the RLUSD growth, the XRPL upgrades actually landing, the Clarity Act finally getting signed into law. Those are the real dominoes. And you stay grounded enough and patient enough to hold through the boring middle, because the boring middle is exactly where the foundation quietly gets poured, while everyone else gets bored and walks away. Zoom out one last time with me. A couple of years ago, XRP was fighting for its very survival in a courtroom. People genuinely wondered if it would make it. Now, 79% of the biggest institutions on the planet are tied to its ecosystem. Real euros and dollars are moving on its ledger, and the builders are laying institutional rails, while almost nobody's paying attention. That arc, that whole journey, only points one direction over the long run. We're early. The foundation's being poured. And honestly, the best part of this story hasn't even been written yet. The pain doesn't last forever. It never does. It never does. So here's where I'll leave you, fam. 79%, real names, real rails, real progress, and a community that's early instead of late. Whatever the next few months throw at us, green or red, we walk through it together, clear eyes and full hearts, because that's what we do here. If this gave you a clearer, more honest picture than the hype out there, do me a favor, drop your thoughts below. Were you already in the "yeah, I knew that" camp, or did this open your eyes a little? I read every single comment. This has been Crypto with BHW, where we tell it straight, with heart. Stay ready, stay hopeful, and I'll catch you in the next one.